Welcome to Foreign Currencies with Scott. I'm your host, Scott. So last time we talked about the fact that we were going to look for a trade to enter after the London Open at 3 a.m. Eastern Time, based on the New York close from last Friday when all the markets closed. So you will see that I have made two lines here, a vertical line and a horizontal line. The horizontal line is, as you can see on the far left, 1.3282. That is the price that the pair closed at on Friday's close of the New York market. Now on Sunday, as you can see at the bottom there, the vertical line is where we closed on Friday. Then when the market opened again, it was Sunday at 4 p.m. Eastern Time. But that was the opening of the Sydney market. And then afterwards, the Tokyo market. And then finally by 3 a.m., the London market opened. So what we're looking for here is a movement away from the horizontal line. If it goes up, we're going to be looking to sell, to revisit, go down and revisit the New York close. If it goes down, we're going to be looking to buy, to go up and revisit the New York close. So obviously what it started doing here sometime after midnight Eastern Time was it started going up. Now, it went up a bit. If we limit ourselves to looking at just to 3 a.m., we would see, I'm going to get it so that it says 3 a.m. on the bottom. There we go. So you can see a movement away from the closing New York price on Friday. And we can see from the grid that it says 0 and then 0.0 and then 20, 0 and then 40, 0. So each one of these is 20 pips. So from our closing price at 3 a.m., it was about 40 pips away. So that 40 pips does meet the criteria of being at least 30 to 40 pips away from our close to enter a position. But I did not enter a position here. And the reason why is that it had gone up, but then, and it did have these two red candles before 3 a.m. indicating maybe it was going to go down again. But then before 3 a.m., as you can see, it went back up. And when it goes back up like that, if it touches the top or barely meets the top and goes back down, that's a good indication that it's going to go down, but it's gone up past that. So at 3 a.m., we did not have a good indication that it was going to go down. So we thought better of selling and just said, let's just stay where we are and we'll check it again. So it being 3 a.m., we weren't going to sit up and watch it. We were just going to get up again at our normal time of 7, which is an hour before the New York market opens, to see what had happened. So the first thing we noticed is that as the hours progress from 3 to 4 and then 5, we're actually quite happy that we did not put in a trade, because for sure we would have had a losing trade because it would have gone up more than 20 pips against us. So here's some time around 3:30 to 4. You can see the red candle there. It does look like it may have made a top a little bit. And we have several red candles between 4 and 5. But then before 5, it moved up again and went higher than that previous peak. So then we look at 5, 6, and it moves even higher still. Now at 6, it sets a peak, and then just before 7, it has two pretty significant size candles. One going up, and then the last one going down, and then at 7 a.m., another one going down. So at 7, we were pretty happy now that we're going down. These two candles next to each other, the green and the red, they have a specific meaning. We'll talk about it at a future video. It's called bearish engulfing. Bearish because it's red, and engulfing because it comprises of the entire green candle to its left, but is larger than it. So that is a good sell indicator. So we would come along here and sell. And then we can see that what happened since 7 is it continued to go down. And now we're quite happy as the hours progress, at least through 10, 10:30, because we can see we have a downtrend. And we can call that a downtrend by noticing that we have lower highs and lower lows each time we set a new marker. Now after 10:30, still tries to go down a bit. By noon it goes down. 1 p.m. it's going down. It's just going down a bit slower now. But sometimes we don't want to hold a position all day long. And once we get to 1.5 of our stop loss, so once we get to 30 pips gained, we may just decide to manually close out. And the reason for that is we don't really always want to hold after the New York market has closed. And it's now after 4 p.m. in the East Coast. And you can see we're still quite a ways away. Yes, quite a ways away from being able to close that position all the way. So we closed out a little earlier. It was in the mid 500s. Right now it's 60.6. We closed out at 133.50 something and made 30 pips. Okay, so we've introduced some concepts today. A lot of decision making, it seems like, not just a rote method that we can follow, but these decisions are based on the data that we're looking at. We're not making any emotional decisions. They're all factual based. And we'll be talking about more of the way we made this decision in upcoming videos. So until next time, this has been Foreign Currencies with Scott. And I've been your host, Scott.